Bismillahirrahmanirrahim. Assalamu alaikum and hi. This is your YouTube channel, The Perfectionist, where we will be discussing about the business. We were discussing about the principles of accounting. In the previous session, we have covered basic classification of business, generally accepted accounting principle, and its assumptions. Now, in this video, we'll discover about the financial statements. Financial statements comprises of two words, money and declaration. It is a declaration of information that is believed to be true and is communicated in terms of money. Financial statements are of 5 types: balance sheet, income statement, statement of cash flow, statement of change in owner's equity, and notes to financial statement. Balance sheet. Balance sheet is also known as statement of financial position because it shows the financial position of a business at a specific date. It has 3 elements: assets, liabilities, and owner's equity. Assets. Assets are known as economic resources that are owned or controlled by a business, are expected to benefit future operations. They are categorized in a form of current assets and fixed assets. For example, in a cafe business, the sugar you purchased is considered as your current asset, whereas the teapot is considered as fixed asset. Current asset has a duration of 1 year, whereas fixed asset has a duration of more than 1 year. Then liabilities. Liabilities are basically the obligations of the business. These are the claims of external parties, means the creditors, on the business. Present obligation arises from a past event, the settlement of which is expected to lead to an outflow of future economic benefits from the entity. Liabilities are the debts of the business. These include notes payable, account payable, and loans. Owner's equity. Owner's equity represents the owner's claim to the asset of the business. It is the investment of the owner. It is the residual value of an asset after deduction of all the liabilities. Here is the balance sheet of XYZ & Co. company. As you can see, on the asset side, cash, notes receivable, account receivable, inventory are the current asset, whereas office equipment, machinery, building, and land are the fixed asset. While on the other side, notes payable, account payable are the current liability, whereas loans are the fixed liability of a company. Then the income statement. Income statement shows the profit and loss position of a business for the period ended. It is also known as profit and loss statement. It has 2 elements: revenue and expense. Revenue. Revenue is the price of goods sold and services rendered during a given accounting period. Revenue includes the earning of the business or gross inflow of economic benefit arising from the normal operations of a business entity, whereas the expense are the cost of goods and services used up in the process of earning revenue. An expired or consumed cost of an asset or resource during normal course of a business operations. For example, office stationery expense, salaries expense, and rent expense or the utilities expense. Here you can see the income statement of a company. for the period ended December 31st, 2019. The company earned the revenue of $10,000. After deducting the expenses of salaries expense, rent, and utilities, they have earned net income of $3,000. Then the statement of change in equity. A statement of change in equity shows the shareholders' contribution and the movement in equity. An equity balance at the end of the accounting period. It is information that shows the classification of share capital, total share capital, retained earning, dividend payment, and other related state reserves. Owner's equity. It is the amount of owner's net investment. Investment by the owner and the revenues are the reason to increase owner's equity, whereas withdrawals by the owner and expenses are the reasons that can decrease the owner's equity. Capital, drawing, net income, and net losses are the four variables that affect a business. So, the basic accounting equation will be assets is equal to liabilities plus capital or the equity. Statement of cash flow. Statement of cash flow shows the cash effect into the business for a period ended. Statement of cash flow shows the cash inflow and outflow of the business for the period. It has three categories: operating activities, investing activities, and financing activities. Operating activities. Operating activities shows the cash effect of revenues and expenses, which are included in income statement, whereas investing activities shows the cash effect of buying and selling of assets. Example: land, building, or any other furniture fixture. Then, financing activities. Financing activities show the cash effect of debt and equity financing. Then, notes to the financial statement. Notes are sometimes called disclosure detail, the financial information related to specific account. This is the mandatory requirement by the IFRS that entity has to disclose all the information that matters to financial statements and help users to have a better understanding. Let's have a quick review of what we have discussed so far. So, balance sheet. Balance sheet comprises of assets, liabilities, and capital. It reports the assets, liabilities, and stockholders' equity at a specific date. Assets listed at the top are followed by liabilities and stockholders' equity. Total assets must equal total liabilities and stockholders' equity. Means both sides of the equation must be equal. Income statement comprises of revenue minus expense. It reports revenue and expenses for a specific time. There is net income when revenue exceeds the expenses, and net loss when expenses exceeds revenue. Statement of change in equity. It comprises of revenue, equity, and expenses. Statement indicates the reason why retained earning has increased or decreased during the period. Cash flow statement. It has operating, investing, and financing activities, which answers where did cash came from during the period, how was cash used during the period, and what was the change in the cash balance during the period. Last, notes. Notes are the first step to financial statements. Notes are the requirement of FIFRS, where every organization needs to follow and disclose every information about the company in the notes. Review question. Which of the following financial statement is prepared as of a specific date? Balance sheet, income statement, owner's equity statement, or the statement of cash flows? So what could be the answer of this question? The answer is balance sheet. Next review question. What is the relationship between balance sheet, income statement, and cash flow statement? So, let's brainstorm. As we have discussed previously, on the basis of these, what could be the answer of this question? So, the possible answer for this could be: a balance sheet is a summary of all the financial balances of a company, as we have discussed previously, while a cash flow statement shows how the changes in the balance sheet counts. And income on the income statement affect a company's cash position. Moving towards the next review question. What are the 5 types of financial statements? In the lecture, we have discussed 5 types of financial statements. Let's remember what were these. 5 types of financial statement include balance sheet, income statement, statement of change in equity, statement of cash flow, and notes. Next review question. Which financial statement is the most important? So, what it could be? So, the possible answer is income statement. The most important financial statement for the majority of users is likely to be the income statement, since it reveals the ability of a business to generate a profit. It revolves around the profit and losses a business incur. Next review question. Do the balance sheet, income statement, and statement of cash flow contain all the information? So the possible answer could be: the balance sheet, income statement, and cash flow statement each offer unique detail with information that is all interconnected. Together, the 3 statements give a comprehensive portrayal of the company's operating activities. That's all for now. What's next for continuation of the topics? Join Perfectionist channel.